This is a Faith in Charts channel. I just want to make a video covering some technical analysis basics. All right, let's put this into a process. This is called top-down analysis, and it's the difference between guessing and actually having a plan when you're investing. You start broad, and you always start on your monthly and your weekly chart, and that tells you the direction of the move. Is it an uptrend or is it in a downtrend? And that tells you the big picture. So what's the dominant trend? Is it going from the top left of the chart to the bottom right of the chart? Or is it going from the bottom left to the top right? Where are the major levels everyone's watching? And then you come down to the daily. The daily is where you're going to confirm your trend within that macro context. Look for the chart pattern or setup forming. The bigger the base, usually the bigger the move. From there, go to your 4 hour or 1 hour to refine it. Is price building structure as it approaches the level, or is it losing steam? Then, and only then, you drop down to your 15 or 5 minute chart to time your actual entry and your stop. Once you're in the trade, you manage it against the same higher time frame structure you started with, not against every little wiggle on the 1 minute chart. If you're investing, then you should be looking for support on your weekly and your daily time frames, and those are going to perform a lot better than your 5 minute, 10 minute, 1 hour support and resistances. So next you want to set up a checklist. So how do you know when a setup is actually good? It's not one thing, it's confluence here. What I'm looking for before I even consider a trade is the higher time frame trend clear. Higher highs and higher lows, or lower highs and lower lows. Is price at a level with real confluence, not just some random line I drew? Has that level held up across more than one time frame? Is there an actual pattern confirming the reaction? And does volume support the move? And before any of that, do I know my stop loss and position size? Sizing for zero is one of the best things that you can do when you're first starting out, especially on small accounts. So, yes. Now I want to be straight because a lot of channels won't tell you this part. Technical analysis is not a crystal ball. Two people can look at the same chart and draw a different trend line. Patterns that look obvious after the fact were nowhere near the clear in real time. Price fakes people out constantly. It breaks a level, triggers everyone's stop, and then reverses right back. That's not you doing something wrong. That's just the market. So it's not perfect. Nothing in the market is perfect. So you should always, make sure you're sizing the right way. And even a great setup can get ran over by an earnings report or a headline that has nothing to do with your chart. So you can see millions of dollars of flow coming in, a beautiful chart pattern, and you're not able to get a winning trade out of it because something in the news happens. Some type of data comes out that affects you. And in my group, in my Discord, I cover, what things you should be looking out on for your economic calendar, as well as what you should be looking out for, with earnings catalyst. So if you're interested in joining our group, the link is in the bio. I will be posting more content. I have courses in my Skool community as well. So if you can like and subscribe, it'd be greatly appreciated.